Welcome back to Wake Up America. I'm Alex Kraemer. It's now time to take a look at today's business headlines. And for a little help with that, let's welcome in America's accountant and accounting professor at Montclair State University, Dan Geltrude. Good to see you, Dan.
Good morning, Alex.
All right, let's start with the markets like we always do. Now, they closed up high yesterday with the Dow gaining more than 900 points and the NASDAQ climbing 400 points. Now, this morning, futures are slightly down. And yesterday's rally was linked to the Fed increasing its benchmark interest rate by half a percentage point, the largest hike in 2 decades. And it's all just to fight inflation. Dan, what is the signal to investors?
I think what happened yesterday in the stock market was investors took a sigh of relief because they interpreted what the Federal Reserve did as not being hawkish or too aggressive related to raising interest rates. When the Fed is raising interest rates, it has, generally speaking, a negative impact on the stock market, meaning there's some competition to investments, go into bonds or something other than stocks. So what we saw yesterday was investors saying, hey, these interest rate increases, they're not going to be as bad as we thought. Let's continue to invest in stocks.
Okay. All right. Well, Federal Reserve Chairman Jerome Powell also indicated more half-point rate hikes could be coming down the pipeline, but nothing more aggressive than that. How do any of these rate hikes affect consumers on a daily basis, and what does this mean for credit cards, car leases, mortgages?
Well, anything related to borrowing money, using someone else's money, like a credit card or leasing your car or a mortgage or anything that you're borrowing, it means it's going to get more expensive. That's by design in terms of what the Federal Reserve is doing, because they want to slow down the economy. They believe there's too much demand. It's too hot. That's why they're doing it. So things are going to get expensive for anyone who needs to borrow. On the other side of this, Alex, if you have money in a savings account, in your bank, a CD, whatever, you should be doing a little bit better because ultimately interest rates go up and you'll get more on your money.
So you gave us a little negative news and then you ended on a little positive news. We like that. All right, Dan, this is all to fight inflation, and Americans are certainly feeling the pinch. What will this do for the GDP, and how long could it take for Americans to see price decreases at grocery stores and things like gas pumps?
I think it's going to be quite a while, and the reason I say that is because inflation doesn't retract so fast. It has a tendency to go up quickly, but not go down so quickly. The reason that we have the situation that we do now is because of poor policies. For example, our energy policies. We were energy independent, pumping our own oil. We've decided to buy oil from our enemies. That causes fuel prices to go up, which causes everything to go up. Groceries. How do we get our groceries going from point A to point B? Well, they go on trucks. Trucks use diesel fuel. Diesel fuel, very expensive. So it's going to be difficult to get these prices down, and I've said it many times. We need a change in our economic policies.
Dan Geltrude, thank you for coming on this morning. It was a pleasure to see you. Insightful information as always.
Thank you, Alex.
Rob.
Thanks, Dan. Appreciate it. Former President Donald Trump proposed a transparency rule to hold